Welcome to Overdraw Enterprise Services LLC. This is Umair Javed, I'm the head of operation. Today we're going to be talking about another form of business structure that is an S-Corporation. But before that, we need to tell you how to form an LLC from our last video. Let's see how we can do that. In order to form an LLC, you need a name, a good name that is going to represent you, plus an alternative choice, as sometimes the name of a choice is not available in the state. But ensure to end the name with an LLC or limited liability company. Decide on the state for LLC formation. File Article of Organization, which is also known as Certificate of Organization, in the state of your choice to hold the legal status. Ensure to follow LLC checklist and prepare related paperwork. Apply for Federal Employee Identification Number, also known as FEIN, from the IRS. Appoint a registered agent to collect legal document on your behalf. Open a business bank account. Apply for any business-related or other licenses with the city or county authorities to conduct business operations. Let's talk about the topic of this video, which is an S-Corporation. An S-Corporation is a special structure of business ownership by which the business would be able to avoid double taxation matters because it is not required to pay corporate income tax on the profit of the business. All profit and losses are directly passed on to the shareholders of the business. After a corporation has been formed, it may elect an S-Corporation status by adopting an appropriate resolution through completing and submitting the form to the Internal Revenue Service. Some states may have its own. Once the filing is complete, the corporation would be able to tax like a partnership or sole proprietor rather than a corporation. Thus, the income is passed through to the shareholders for the purpose of computing tax returns. 90% of the small corporations elect S-Corporation status so that the profit and loss can be added to the shareholders' personal tax return without having to pay tax on profit once and then again when they are given back to the shareholders as income or dividend. This is known as double taxation issues. And this is the main reason why S-Corporations were formed in the first place. An S-Corporation can also revert back to a regular corporation status fairly easily. There are some limitations to an S-Corporation, that they cannot deduct some expenses like healthcare insurance, travel entertainment, and many similar to like that a normal corporation can. Also, they are restricted to 100 shareholders or less, and all those shareholders must be US citizens. Finally, an S-Corporation may not own or be owned by other business entity. Let's discuss pros and cons of having an S-Corporation. Let's discuss pros. Prestige of a corporation without double taxation. Company's director, officers, shareholders, and employee enjoy limited liability protection. Elimination of double taxation of income, as the income is not taxed twice but offer pass-through taxation, which means the income is not taxed at a corporate level and owners report their share of profit and loss on their individual tax return. The company can attract investors through sale of shares of stocks on investment opportunities. The business continues to exist even if the owner leaves or dies through perpetual existence feature. Let's discuss cons. An S-Corporation is more expensive to set up than a DBA. Unlike the C-Corporation and LLC, owners have to have a legal resident status in the United States, be it US citizen or a permanent resident. An S-Corporation cannot have more than 100 shareholders. It is necessary to first incorporate the business by filing Article of Incorporation, obtain a registered agent for your company, pay the appropriate fee. Many states may impose ongoing fees such as an annual report and/or a franchise tax fee. Mistakes regarding the various tax filing requirements can accidentally result in revoking the S-Corp status. Payments to employee and shareholders could be distributed as either salaries or dividend. Each are taxed differently, which is what leads the IRS to scrutinize the distribution more closely. Now that you know what an S-Corporation is and what are the pros and cons of having one, so the questions come how to start and form an S-Corporation. But for that you would need to wait for our next video. This is Umair Javed signing off.